Well, g'day there, traders and friends, market participants right around the world. Thanks for joining me as at this Monday afternoon market recap. What I'll do for you right now is just put this bullish move in context and what we're looking for in terms of confirmation for, again, the legitimate back test of this all-time high, retesting old resistance as new support, and what we expect moving forward given, certain types of price scenarios which may be playing out over the next couple of weeks. First of all, the Dow Jones Industrial Average closed up just over 100 points, and the candlestick is relatively bullish. It is very close to, or very similar to what we call a one white soldier. We did gap up between Friday's close and, of course, Monday's open, and we have traded up and closed above the previous day's opening price. We are still yet to break above this high wave spinning top, or at least the upper wick of Friday's candle. But nonetheless, it is a relatively bullish signal. What makes this even more interesting is that we almost did come down on Friday and retest that 50, albeit very, very briefly. You can see we were only a couple of points away from this critical price trigger coming in about 18,317 before we saw the bullish pop on Friday. But again, a relatively bullish signal, and it is showing up at that right location. This is macro support. So what was once macro resistance is now technically macro support. And also on top of that, the Dow Jones Industrial Average has put in once again another higher low. So this is more so on the micro, if not the intermediate trend. But irrespective of that, we have just established what appears to be that next higher low. So technically, all things are still bullish at this point in time. However, once again, glaringly staring us in the face, we do have what appears to be some form of a potential double top still in play. And that is still very much so possible, but what we're looking for again is for that neckline to crack. And what we need to see is price come back down and at least break and pierce below the 50 EMA, but also more importantly, the neckline of the chart pattern itself, which is coming into play around 18,200. I do not have a bearish trigger at this particular point in time because first of all, we need to see those bearish candlesticks set up and to actually see price push on down a couple of hundred points until we get closer to that neckline of that potential double top. Now, on top of that, and not to make things, or at least to complicate things, I've gone through at least the chart pattern which we're looking at. I've spoken about the neckline for the confirmational break to the downside, but also I've spoken about how bullish, or at least in terms of candlesticks and around that 50 exponential moving average, how generally this is a continuation type of signal to the bullish sort of the momentum of the bullish case to the upside, and that appears to be so as well. So at this particular point in time, we are still relatively bullish until things begin to change. Now, this is a bullish signal. For it to be validated, we'd like to see the Dow push on up above the relative high, which is coming in around 18,678. The same is true for the S&P 500, a similar type of candlestick. But for this to be validated and to really get behind a strong continuation, you want to see the piercing, or at least the push above this particular candlestick, which we saw on the 22nd, which is what we call the gravestone doji, which is a very bearish signal on the daily in terms of candlesticks. You've got one here. You also have a very similar one, a hybrid pattern over here, which sort of fits the case more so of what we call a shooting star. But we want to see the S&P 500 probably pushing up above 2195. That is a rough estimate. And also on the NASDAQ, we don't have that same candle formation as what we've seen on the S&P and the Dow, but it is a relatively bullish candlestick. But again, you've got those two relative highs here. I can bring up the right trigger on the NASDAQ, but you'd be looking for a move above 5284, 5284 to confirm this most recent day's worth of buying taking place across, again, the three widely followed US markets. One very interesting point, which I've been speaking about for months, okay, is on the Russell. I'm not sure if I've shared this publicly on YouTube, but I'll go through it with you now. And it comes down to trends. When a primary bullish trend begins to reverse, what we look for, and also very common patterns which show up to confirm terminal trend reversals. And this is becoming very apparent on the Russell, although we haven't seen any material sort of change in price or price direction. It is something that I am personally keeping a close eye on just over the coming weeks and months to see if anything sort of arises from it. Now, generally when we talk about trends, or when we do talk about trends, we have to speak, or at least talk about the trend from the beginning of its move. And really that was the beginning of 2009 as the equity markets put in their respective lows. Since then, we've established three primary fan lines. Now, what we've done is we've got the first level of the trend, which comes up through to about mid-2010. Once we broke down below this trend line, what happens? We bounce on up into it in the future and we retest that old support line as new resistance. Okay, and we've established that. What happens? We hit the resistance, we'll turn, and then we will create a second fan line. Oftentimes we will bounce and continue the trend. That wasn't the case. What we've done is broken down in 2011, and we have created what is still in effect right now, that third fan line. Okay, so once we broke the second fan line, we've come down and we've established the third fan line. But again, once we rally back up and retest the second fan line, it will act as resistance as it has done in 2012. And also we project that second fan line into the future, and we see late 2013, early 2014, how once again it continues to hold as resistance. Now, focus on this third fan line. Generally, fan lines, they work in groups of 3. So since 2009, we've had multiple touches in 2011, also in 2012. And since then, we really haven't danced around it until late 2014, where we got very close to it. But most importantly, 2015, where we started to see a lot of congestion around it. Once we break below the third fan line, generally the market or a market is moving sideways. And that's exactly what appears to be the case for the Russell. However, since the lows in 2016, which reconcile with the February lows across the 3 widely followed US indices, it's been up, 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 up. We've broken this bearish trend line, which we're keeping a very close eye on. Along this bullish parabolic rise to the upside, we've had some very interesting candlestick reversal patterns which simply haven't played out, and we've failed to continue the bearish trend. But what's most important right now is that the Russell has, one, it's broken that third fan line. It has rallied parabolically, right, to the upside. And now for, I believe, the 5th or 6th consecutive week, we are retesting that old support line, which was the third fan line, as new resistance. Now, again, going back to the beginning of this discussion, we haven't actually seen a material reversal or any type of true warning confirmation. We have seen warning signals in terms of weekly candlesticks, but we haven't seen a push for price back down below this particular candlestick right here. And this is what I'm keeping my eye on. So on the molecular level, this is what we call a hangman candlestick. It is on the weekly chart, and it's giving us a really nice framework for where confirmation will be attained if in fact the Russell decides to roll. Now, I'm not sitting here calling for a roll on the Russell. We could see over the coming weeks the continuation and the legitimate breaking of the back test. But generally what happens, once again, as you see, and I'll zoom out for you, when we break a fan line, okay, when we break a fan line, price will generally rally and then retest this fan line. It could be for a number of weeks, it could be for a number of months, but ultimately that is the resistance area which will turn and slow the trend. Again, once we break support, we would oftentimes rally back up into it, and it will slow the trend down, or at least bring in some form of an intermediate reversal. The big difference between these past reversals, again, and this one over here where we moved into a sideways moving market, is that on the third fan line, it often means that the trend, the presuming trend, the trend which has been in effect since 2009 is over. And again, you look at some of these chart patterns, it looks like, again, head and shoulders types of patterns. It is starting to break down with this most recent push above 1,200. But again, putting things in context and keeping things in a certain perspective, we can go through the analysis on the Russell. That's all well and good, but how does it fit into our discussion and our narrative on the Dow, the S&P 500, and the NASDAQ also? And again, just to sort of condense this into a couple of sentences, we are seeing again the sort of the beginnings of a bullish continuation, some good candlesticks showing up at the right location at a macro support area, which was once macro resistance. And until we break that 50, and until some of these divergent signals, again, start to confirm, we have to still address this market, approach this market with a sort of bullish perspective until things change. So that's really a good market recap. As for Monday, I'm not going to go into individual trade detail at the moment. This is more so just a market update as at the close on Monday. So have a great Monday evening, everybody. I'll be back with you at some later point in this week for another market update. All the best. It's James signing off on behalf of Pivot Point Trading. Goodbye.